So we are starting a fresh month of trading here, September 2019. Typically, volatility does tend to increase a little bit, so I just made a special note to our paying clients on sort of the structure of broadly the market in terms of equity, S&P 500. And while I'm hesitant to kind of focus on the index too much because I think there's actually other opportunities that are actually much better, I know that a lot of people look at that as a benchmark for risk. So I'm going to give you guys my potential two downside targets here that we may see in the S&P 500 in the September-October period. Now, I will say there's risk to this, obviously. One risk will be if we see a quick devaluation in the dollar. I think that could be rather bullish for stocks. Number one. Number two, of course, if we see any sort of resolution to the U.S.-China trade war, I think that could be something that would probably lead to a risk-on period, at least for a short period of time. So let's have a look at these two downside targets, and you'll see a lot of confluences coming together on these charts right now, which is really kind of where I get excited, because the confluence means a lot of stuff at once is coming together. So here we are. All right. So first of all, obviously, this is the big picture chart of the S&P. If you've been following us here on social media or your paying client, of course, you know this very well. This is our long-term chart of the S&P 500. Here we have our rising, actually it's a cone or whatever you want to call it. A lot of people have different names for it, but really it's a megaphone pattern is what it refers to. And basically you can see, let me get a pen. You can see the S&P is now here, so the path of least resistance would be towards at least the middle part of this range here. So there's a lot of downside. Now this is a long-term chart, so just keep that in mind. This does not mean that the S&P has to mean revert down here right away. Where it gets much more interesting, and this is where the downside targets come into play, is when we look at the daily chart. Now again, we're looking at the S&P 500 cash index, and I'm going to get the thing straight here. So what we're looking at here is a candlestick chart, daily chart, and you can see a bunch of stuff happening. So first of all, down here we have the lows of late 2018, and obviously a big rally so far in 2019. Now we have potentially made a sort of head and shoulders pattern, left shoulder, head, right shoulder. That's yet to be confirmed, but it's interesting to note. And where it gets really interesting is when we go into this part of the chart here, okay, basically from the highs of late July, we had a sell-off into early August, and then August for the large part was kind of just choppy in this box. Now where it gets interesting is if we measure the move of up here to down here, and we subtract it from the top of this choppy range, that gets us to a first downside target around 2750. I mean, it could be a little bit more, a little bit less. Let's give it 10, 20 points either way. But that does line up with the lows that we saw in early June, late May. What's also interesting is that this does line up with a 38.2% Fibonacci retracement of the entire move from down here to up here. So the entire move from here to here, back down, is a 38.2%. So there's a lot of support here in that area. Target number two would be if we do almost the same thing, except in this case, we are taking, again, this distance here, and instead of subtracting it from the top of the range, we are subtracting from the bottom of the range, which gets us down here, which is an area closer to 2600, and it does also line up with a Fibonacci retracement, which is the 61.8% retracement from down here all the way up. So 61.8% of this entire move gets us down here to about 2600. Now, obviously, none of this stuff is written in stone, but and we could see the potential upside risk, as I mentioned before, but these are two targets I'm looking at here. Hope this is helpful. If you guys like this, folks, if you have any comments, leave a comment down below. Give us a thumbs up, like. Talk to you soon.